Good morning, shareholders and stakeholders of Image Resources. My name is Patrick Mutz, and I'm the Managing Director of the company. I'm very happy to address the audience this morning to update a bit on our progress on the Atlas Mineral Sands project. As those of you who may have read our announcements, we are actively constructing at Atlas. We have, in fact, after we received the last two water licenses, moved to accelerate the construction efforts, and happy to say that we are on track to complete construction early in Q1 and anticipate as a stretch goal that the commissioning of the project will also happen in Q1 and first heavy mineral concentrate production will occur in Q1. I think it's important that we cover a little bit about the significance of the Atlas Mineral Sands project to Image and its shareholders. Image came off of being an active producer at its Boonenaring project from 2018 late to 2023, and we have now been out of production since that time. So the first part of Atlas is returning to active production, revenue generation, and profitability. And I'm very excited to say that while there has been a gap, we've been able to span that gap with our cash reserves to continue to build Atlas, and we have sufficient cash to finish that action. I'm also happy to say that we've recently secured some working capital funding through what is called a prepayment facility for HMC offtake. And this means that the company now has access to US $20 million of a loan facility, which will be repaid in HMC deliveries to our offtaker, our key offtaker, referred to as Natfort in China. The working capital is important because this allows us to go all the way through now to positive cash flow at Atlas. And Atlas is an important project for Image in that it is serving to be the bridge project. It is not the longest term project. It may only have a 3-year mine life, but what's important about it is that it's a very high grade deposit and it will be profitable. And it buys us the time then for the development of our Chapter 2 ambitions. And again, for those that have read some of our ASX announcements, Chapter 2 means that we are moving towards a time of having multiple mines operating simultaneously, generating multiple products instead of a single product as we do today, and then marketing that into a global market environment. And so Atlas is essential to getting us through those stages. The next project that we will be talking about for development is a project called Yandanuka. It's also here in Western Australia, and it too has already been showing positive attributes in a pre-feasibility study, and we're actively working on a bankable feasibility study now with the hope of fast-tracking the project once that feasibility is completed. Another important aspect I would like to update shareholders on is our Chapter 2 ambitions. When we talk about multiple mines operating simultaneously, I mentioned already that we are working on a bankable feasibility study for our Yandanuka project, which will have a mine life currently estimated at just over 8 years. And we have a pre-feasibility study also on our Bidamina project, which has a pre-feasibility that's positive and a mine life estimate of just over 10 years. The important part is that there are two other projects in our portfolio, one called McCall's and a second called Mindara Springs, that are just 15 kilometers north of the Boonenaring site. And each of these has the potential to be a 50-year mine life. And we are currently looking at the concept studies on these two projects. When I mentioned that we had a successful Boonenaring project, this was built on land that Image owns, and what we have looked at is now how to repurpose that land and that facility for post-mining use. And what we've come to is a very strong understanding that the best use for Image of that land is to use it to site a mineral separation plant. if in our Chapter 2 ambitions of multiple products into the global market, it means that at some point we have to move away from our simple business model of a single product and separate into multiple products. But there's also one other very important reason for wanting to move to multiple products. That it turns out that all of our projects, including Atlas, but certainly all of those in the Chapter 2 portfolio, have ilmenite, which is very high grade and suitable for synthetic rutile production. And that's a very important value add step that Image is planning to also employ in its Chapter 2 strategy. And so the location of a mineral separation plant in the future at the Boonenaring project makes very good sense to take advantage of the installed infrastructure that's already there, which is water, power, even a solar farm, and then to tack on a synthetic rutile production facility at the back end using new technology, and in fact using the solar farm hopefully to generate green hydrogen for use in this process, is the best use of that land overall. As a matter of update also on this synthetic rutile technology, Image in November of 2023 patented or provisionally patented the process. We think it is novel. We think it is going to be very important to the industry going forward. It has a significantly lower carbon footprint than the existing technology used today. Along those lines, I'm also happy to say that we have applied for and have already achieved stage 2 acceptance in a grant program from the Western Australian government that will help us to build a demonstration scale pilot plant or demonstration scale plant. And we're going to build it at the Boonenaring facility. So if we are successful in receiving the grant that we applied for, our ambitions are to build the demonstration scale plant starting at the end of 2025 and operating it during the year 2026. And then going forward to hopefully convert that, if it is all successful technically and economically, converting that demonstration scale plant to a small scale commercial plant for operation in 2027, 2028. When we talk about Atlas, I think it's important that we recover sort of the strategy that we're using. The market is very competitive. Costs are higher than they have been because of inflationary pressures. And I think it's important that I point out that the strategy we're using for the development of Atlas is the same strategy that we successfully used at the Boonenaring project. And what I mean by that is starting with a simple business model of just selling a single product of heavy mineral concentrate rather than a more complicated business model separating products. So for Atlas, we will maintain that simple business model. But in addition, we're actually using the vast majority of the same equipment that we used at Boonenaring, the same contractors, the same construction teams, and largely the same team that we used to operate the project. So we are largely just replicating our efforts at Boonenaring. And so if we are successful, as we were at Boonenaring, then we should see an on-time and on-budget build for the Atlas project. And if we are successful, we should see a short ramp-up period to nameplate capacity. We set a very high bar when we started up the Boonenaring project of moving to full nameplate capacity in only the second month of operation. Now that's largely unheard of, but we have done this and we anticipate we can do it again to demonstrate that it is doable. These are significant value add techniques, if I can use it, to keep us competitive in a current tough market. And of course, I would be remiss if I didn't mention Image's ESG efforts. Image started into the world of mining back in 2018, 2019. And shortly after we got started, we were one of the first companies in mineral sands to install a solar farm at the Boonenaring site. And that solar farm went on to generate about 25% of our electricity requirements for the duration of the project. I think we were the first mineral sands company to move into that space. And so that's the philosophy of our approach to the overall environmental and social and governance aspects. We have published two reports so far on our ESG efforts, which outlines our actual success. The first one covered the first 4 years of operation and published in 2022, or through the year 2022, and it outlined all of our efforts on water conservation, the solar farm use and energy conservation. And then we published our second annual for the year, calendar year 2023. So these are available on our website for you to gain some understanding of our efforts and our plans and our ambitions. And there are more to come. We are not in the business of overemphasizing what our plans are, but rather reporting on them once they actually come to fruition, just to make sure that we avoid greenwashing of any sort. Now, I think I've covered all of the major aspects that I'd like to start with as far as updating, and I'm now open for questions. Thank you.
I see we have our first question. Questions comes from a shareholder named Josh. Josh asks, what are your plans for the drawdown of the prepayment facility? Just as a reminder, we announced that we received a US $20 million prepayment facility arrangement with our HMC off-taker Natfort a few weeks back. And so the idea is that as we need funds, we will submit drawdown requests. We anticipate 2 tranches of drawdown from this facility, likely both at US $10 million. I initially anticipate the first one will happen in December and likely in January for the second one. So that's the answer to that question. Another question from Samuel. It's a bit longer, so I'll read it out. It says, what is the expected lead times between expiry of Atlas and commencement of Yandanuka, and including permitting times? Thank you, Samuel, for that question. Typically, a lead time for permitting for a project is about 3 years. But what's happened in the case of Atlas is it actually took a little more than a year longer, and it was due to the difficulty EPA had with actually meeting its internal deadlines. And they told us that it was because of manpower shortages, of course, and a strong demand for various permitting requests from the mining industry. The mining industry is doing very well, as we all know. For Yandanuka, the reason we're looking at that one a bit differently is that it is sitting on farmland, and so the overall permitting process should be shorter. Our objective, of course, is to fast track Yandanuka, and we've been working on it now for a little over a year, such that we can get to production before Atlas is exhausted in its ore reserves. I'm seeing another question here from David. Have been investigating. I'm an investor with Image for more than 10 years. Seen the share price go up and down and backwards in spite of company being in production for several years. I'm not sure I can get a question out of that except to say these are very probably normal cycles. I think in the case of Image, because we did not have another project with a longer mine life in our pipeline at the time when the share price started going a little bit soft toward the end of Boone and Iring, and then with the advent of the information that the permitting has been delayed, there has been a significant softening of the share price. In October of this year, of course, now that we're back on track to construct and get started with production at Atlas, the share price has started to firm back up. I anticipate that once we continue with the announcements on progress for construction, and then more importantly, ramping up and commissioning to full nameplate capacity and first sales, which are currently anticipated for Q2 2025, I'm quite confident that the share price will begin to firm back up. Another question here from Samuel. It says, how are you seeing the market for mineral sands at the moment? And what do you see as far as price levels? One thing for sure is that Image can't predict the price levels on the commodity prices any better than any other company, nor should we try, really. But what we're comfortable with is that mineral sands commodity prices typically follow a cycle of in line with the GDP growth in the world. because that's what drives their demand. And I'm very hopeful that they will stay firm. They have been strong, and there are actually indications that they will be increasing in the near future. Our goal is, of course, to have to make the mines work economically at the current prices, and even have some room on the bottom, and we have that opportunity. Thank you, Samuel, for that question. I may see if I have one more here. Yes, another question from Amy. What steps are being taken to ensure the long-term sustainability and environmental responsibility across the projects? Thank you, Amy. Look, we have demonstrated a fairly strong philosophy and operation strategy around ESG in general. We published our second ESG sustainability report for the calendar year 2023 a few months back, and the short story is that we were one of those companies that started looking at this idea of how to meet the environmental, social, and governance aspects of operations early on. And one example of that is that we built a solar farm on the property and started offsetting about 25% of our electricity requirements with renewable energy from the solar farm. This is at the Bunanaring project. And by the way, we did not need to install a solar farm. We had all the grid power that we actually needed. But this was in an effort to understand we have a responsibility to do what we can to minimize the environmental impacts. We have a long way to go, but we have many things we have been working on in conjunction with local landowners on agricultural land improvement ideas. I won't go into detail with them, but there is information in our 2 published ESG sustainability reports that are on our website that can help understand more of that. Clearly, in our strategy, it is about growth and sustainability, and that sustainability goes to the growth, to the sustainability as an operator, but also as an environmental steward. We plan to be in the area in Western Australia operating in mineral sands for the next 25 plus years. So we know we are embedding here because we want to be here for the long term, and therefore our attention to the social impacts that we're having and our participation in community events and community contributions are happening, and they will continue to happen. Another question from Lewis. What should investors be most excited about regarding Image Resources' current portfolio and the future opportunities? Lewis, I would hope that part of the original information I provided in this podcast speaks volumes about that. I think this is the primary point is that Image has a portfolio of projects in its very diverse portfolio now, and they're development projects. So while we will be in production again in Q1, Q2 of 2025 at Atlas, we also have a pre-feasibility study on 2 other projects, the first one being Yandanuka and the next one being Bitamina. They have longer mine lives of 8 years and 10 years respectively. And then we have 2 other projects in our portfolio that each could have 25-year plus mine lives if we develop them. And we are working on the concept study. So the point is we have a development pipeline that is all geared towards moving Image from being a miner on one mine at a time and only producing a single product and a single off-taker to operating multiple mines simultaneously and separating the products into 4 or 5 different products marketed globally. And then to take the lower priced product in the market called ilmenite and enhancing the value through a process called synthetic rutile production. And we have, as I mentioned in the main part of the podcast, a provisional patent on a concept that will change the processing potential for ilmenite into synthetic rutile. And we will be hoping to build a demonstration plant to demonstrate both the economic and technical aspects of that process in 2025, probably building it at the end of the year. It looks like that is the last question I'm seeing at this time. So I want to just thank you very much for your time today, and I look forward to future podcasts to update shareholders on Image's business progress. Thank you.